Hey guys, I've been talking about the markets here. I've been talking about them for quite a few videos. I like to always start with that, but if you go back from my previous videos, you'll see that I've been predicting a drop. So sometimes the news will happen like COVID, but there's usually a sign ahead of time, like with the markets going down in momentum or something, or in a downtrend. So let's take a look at the markets. I'm mostly just going to talk about that because there's not a lot of great opportunities in terms of positive situations, but you can potentially look at inverse ETFs or bear ETFs. But anyway, if we look at the Russell 2000, we did break out of this down, big, huge sort of consolidation period, wedge, and pulled back, and so that was a good entry point, and then it just reversed itself. And once we broke through this volatility stop, heading in a down direction, that was where I was getting nervous. It'll go down to the 50 or the 200 before you should get back in. But with the news today, but of course this is not a surprise when you have this big down candle, because you can see here, as I mentioned, you broke this downtrend. You're starting a downtrend. You broke through this support here, but the momentum is showing this decline prior to this. So you might have had support in a continuation here, but you wouldn't be in this, or you'd be doing a short situation, inverse situation for an ETF. So if you look at my videos for the past week or more, I've had some concerns with the market in terms of what it looked like in terms of the downtrends. If we look at the Dow Jones, you can see here, we had this red dot in the volatility stop, so we broke through. We're in this downtrend, so it came down. You see this high here, and then it came up, it created a lower high, and that's when you get nervous, when you start to create a lower high, and then that creates the downtrend. So you broke this uptrend, and you're starting a downtrend. And of course, right here, when you cross this momentum moving average, which is the MACD or the price percent oscillator, that's why I was concerned. Declining stochastics, declining momentum, and you can see an obvious downtrend here. So now we gapped down below the 50 here. So I'm looking at the pre-market. You can see up here it says 7:56 a.m. Eastern time. If you want to get a free trial or $25 off subscription to TC2000, that's what I'm using, check out the link in the description below. I've got the gold plan, so I've got real-time data. I can do alerts, and what I like about this is the alerts and the scans. You can text yourself. You can have them text you or email if there's a cross of a moving average or whatever criteria you have, so you don't have to be watching the stocks all the time. I've got there's a lot of information with different tabs here. Each tab is a different set of columns and different set of stocks, a watch list that I'm looking at. So I mentioned, I think before, that if one of the markets like Nasdaq looked okay at the time, but the other ones are down, it's not a good sign, because that means that it's not a consistent uptrend for everything. It's not always the case, but when most of them were in a bad situation, that made me hesitate, even if one was still doing okay. But S&P was looking okay, it was flat, but the thing I didn't like was this momentum was declining. So it never happens, or I don't want to say never, but when this happens, you can think, oh, it's a news-driven event, but there is a decline, so there's fear growing maybe, and then something triggers it. But we were still technically above, in a decent state, sort of a flat period, but nothing crazy. But I mentioned that at the time that this momentum was flat and sort of crossing, as you can see with this histogram here. If we look at the Nasdaq, I mentioned the same sort of thing. We had a flat little momentum indicator. Now what happened right here was this big, you can see when you have a wick on the top, it was up here, it started up, and it pushed right back down. So that's kind of a reversal right there. You have a big bearish engulfing, it's called. This candle engulfs the previous one, and maybe sometimes more than one. But This one obviously doesn't look as bad as some of the other ones. What happens a lot of times with the pandemic is that the tech stocks will do really well. So if we go back to March, we had everything goes down and then you have this big rise, and this one went up quite a bit because you have companies that are doing well when people are at home and not traveling and spending money on restaurants. They buy products and things like that. That's about it for the markets. If you look at sectors right now, obviously the VIX is, you can even see that we had a bit of an increasing momentum right here. So some people, there is a chance when you see that there will be something happening. You can see gold miners, there's a bit of a bump there, but we'll see if that sustains itself, because a lot of times when there is a bigger market crash, everything goes down initially. So even if you're thinking like one of these gold or silver or whatever, might be interesting, it's just that, a lot of these things will go down altogether in a group. But right now, there was a little bit of a bump from that. If we look at if I inverse this upside down, a lot of the like jets obviously travel is going to be affected by the outbreaks and things like that. Even the uranium, but that was already in a downtrend. So was jets, of course. Bitcoin, as I mentioned, like this was already downward momentum. See this here? So, it's not surprising in sense of where it was going at the time. And Ethereum is down as well in pre-market. It's been in a bit of a pullback here with this. So I really like this price percent oscillator MACD, because sometimes when something's going up or even flat, not all the time, but you'll see a divergence in the momentum versus the price, and that gives you sometimes a warning that even though the price is going up, there's a momentum change. So you could potentially look at inverse funds, and there's some that are 2 or 3x. So you can see here, those are the direction ETFs. So you can see DRIP is a oil and gas bear 2x. Obviously that's up 11% already this morning. Let's see. FAS is a financial bear 3x. That's, so the reason I see these is because I'm looking at US ETF. So if we look at TC2000, it's really awesome, because you've got your US stocks, your ETFs, you've got just things that are in the pre-market moving. You have Nasdaq, S&P 500, and then there's some Canadian ones as well. So when I'm looking at the US ETFs, of course, right now, because of the 2 or 3x and the fact that everything is down, the ones that are going to be positive are, generally the inverse funds. But another way you can do that is to add them yourself. So if you're finding bear or inverse ETFs, in your ventures, either when you're scanning or on the web or whatever, you can just create a watch list. So I have a watch list for Canada, not a huge one, but these are inverse. Now this isn't pre-market because Canada isn't in the pre-market information, but I've got a Bitcoin ETF that's inversed. I've got I think that's a TSX, Toronto. They've got the VIX, the TX. This is the TSX. We've got S&P bear. We have the, so there's a whole bunch. This is actually different ETFs. There's a cannabis one, which is inversed. There's the VIX, and this is the Nasdaq. So, and of course it's not showing the values, but similarly, like I mentioned with Nasdaq, you can see it was flat and now it's crossed over. Even these last two candles with a red dot volatility stop, you're still in a downtrend, but this could break through, and then like it does up here, and then you can potentially hold it for an uptrend. Of course, that's been somewhat dangerous for most of the time. You get these little waves, but sometimes you get a big one, like when the crash happened. But for short-term situations, you might be able to you can do that, or you can just stay out of the market. But hopefully that helps. I just wanted to go through the main markets, but this is predictable. And of course it's pre-market. We don't know what's going to happen during the day and if people buy the dip and all that stuff. But there has been a quite extended period of time, and this is not surprising in the sense that most of this was in a somewhat of a downtrend initially to begin with. So if you want to get TC2000, I'd check out the link in the description. You can get a free trial or $25 off. Helps my channel. I get a bit of a commission. I'm using it. I've been using it for a long time, and it doesn't cost you anything to use my link, but it just sort of helps support the channel. So I hope to do these regular basis and get into more stocks and ETFs as well. I show you scans. I show you, what I've been doing for conditions and formulas, and making the best out of this program. But it's amazing. So we'll talk to you next video. Good luck, guys.